So in the previous lesson, we talked about long-term trading or swing trading, which is more of a part-time approach to trading. In this lesson, we'll talk about day trading instead. Day trading is full-time, right? It is not part-time, it's full-time. It takes more time, it takes more skill as well, right? In day trading, you're mainly focusing on the lower time frames, whereas with swing trading, we're focusing on the higher time frames. The thing with day trading, you will still be focusing on the higher time frames because you need to understand what is happening with the larger picture. But your main time frames will be the daily chart, the 4-hour chart, the 1-hour chart, and then you will execute on the 5-minute chart. Whereas with swing trading, the main focus would have been the monthly time frame, the weekly time frame, the daily time frame, and maybe execution on the 1-hour chart, right? So day trading, you're looking at all of this, focusing mainly on the daily, and then figuring out the bias on the weekly, and then seeing what's happening on the monthly chart to kind of gauge the long-term point of view, but mainly focusing on the daily chart and the lower time frames. With that said, with day trading, you have to make your watch list every single day, right? So you have to be on the charts every single day when the market opens, right? Whether you're trading Forex, right? When the market opens, you got to be there to make your watch list. If you're trading equity, same thing. You got to be there every single day to make your watch list. Same thing with crypto. You got to be there every single day to make your watch list. If you're trading all three styles, or all three markets, I mean, Forex, equities, and cryptocurrency, putting day trading all those markets every single day will take some time to actually make your watch list and plan your trades, because guess what? You will have to scan all the pairs, all the tickers, all the stocks that you're watching and so on every single day, right? And then guess what? On top of that, you have to keep an eye out on your watches, on your setups throughout the day as well, right? I'm not talking about sitting on the computer 24/7. That's not what trading is about, right? But 1 hour every single day, you have to fully commit to making your watch list every single day. And then throughout the day, you're going to have to jump on the computer maybe 2 times, maybe 3 times to see how things are developing, whether you're going to have an entry or not. Day trading, whereas swing trading, we're focusing on positions were typically lasting anything from a week to maybe 3 months. Day trading, positions can last literally from anything 2 hours, right? Literally 2 hours. I think the fastest trade I ever had, a day trade, probably was within about 30 minutes in and out, 30 minutes in and out, right? Whereas, and the maximum for a day trade I would say would be a week, right? That would be the max. And that just means that you execute the trade, it's more of a little bit of a larger target, and the trade is a little bit slow to develop, and it takes 5 days, as an example, for your profit target to be hit, right? That's kind of like a slow day trade. But day trading is literally anything from a couple hours, maximum a week, right? But the main thing is you have to be there every single day to make your watch list. And with that said, there's also more opportunities, right? Hence why it's more full-time. You also have the possibility to make more return, a bigger return, right? Because there's more opportunities. But at the same time, it's also more opportunities for more losses, right? Always got to keep that at the back of your mind. There's more opportunities for profit. Also, with that, there's more opportunities for losses. With that said, day trading is epic. I would consider myself more of a day trader than a swing trader, right? I love the short-term approach, right? So a lot of my analysis is focused on the short-term approach. And in the next lesson, we'll talk about hybrid, which is kind of a blend of both. And that's what I really prefer. But short-term trading is great. So if that is what's for you, right? If you prefer to be a day trader or short-term trader, you got to keep that at the back of your mind. Everything that you do is short-term, right? You cannot get sucked into the long-term bias. That's what I've noticed. Here's a little lesson, right? That's what I've noticed with a lot of traders is they get so sucked into the long-term bias, the bigger picture, right? The swing trading approach, but deep down within their heart and all the trades that they've executing are short-term, they're day trades, right? But then they stretch their targets and they change their management techniques in the last minutes and so on, because they get FOMO, fear of missing out of the bigger picture. So I just gotta say this is a very, very, very important lesson. Commit to your trading style. Whether you're a swing trader, commit to long-term trading. If you're a day trader, this is even more important. You got to commit to short-term trading. So everything that you do, from catching the daily run to catching the daily pullback, it's all a short-term approach. You're going to be utilizing short-term management instead of long-term management, right? You got to keep that at the back of your mind all the time, that you're a short-term trader, right? And don't get sucked into the long-term kind of bias with day trading, right? So day trader, that's kind of what it is. And it's the most popular approach out there. And literally, you just have to be on the chart an hour every single day. So if you can dedicate an hour every single day to the charts, mainly to make your watch list, you can day trade, right? But if you cannot dedicate an hour every single day, then swing trading might be your thing instead, right? So this is kind of what day trading would be like. You spend about an hour to make your watch list. You figure out your position sizing and all of that, right? And you'll know what I'm talking about once we get through the strategies. And then you place alerts where you want to enter. And then you just wait and wait and wait till that alert gets hit, right? You might want to jump on the computer when the London session opens up to see how things are developing. You might want to jump on the computer when the New York session is opening up to also see how things are developing. And you're probably going to be making your watch list, that hour chunk, at the start of the day, which is the Asian session, right? So realistically, you could jump on the computer about 3 times. Beginning of the Asian session to make your watch list, spend about an hour, right? And then about 10 minutes later during the London session to see how your watch list is developing, to see if you have to be on the computer to actually execute a trade. And then maybe again when the New York session is opening up, again to see how things are developing, whether you have to be on the computer or not to execute a trade, right? But you'll be placing alerts, so even if you cannot be on the charts, if you're still working and so on, you can place an alert. You'll get a notification on your phone, this level was hit, and then you know that a potential trade might be happening. So that's kind of the difference in the trading styles: swing trading to day trading, long-term trading to short-term trading. Short-term trading obviously has many more opportunities, right? But it also takes more time, right? That's the thing. It takes more time. You got to be there daily. Whereas with swing trading, it has less opportunities, right? Because it's more of a part-time approach. It's longer term, right? So you're mainly going to be making your watches at the beginning of the week and then just waiting. That's it. You don't have to be there every single day. You will probably still scan your weekly watch list, your longer term watch list every single day, but that would literally take 10 minutes, not an hour, 10 minutes, right? Just to see if that higher time frame bias is playing out. That is day trading. So talked a little bit about what day trading is. We also talked a little bit about the differences between swing trading and day trading. And once we go through the strategies and the rest of the lessons, we'll focus on that even more. The strategies themselves, I'm going to say this right now, the strategies themselves are focused on day trading, right? So I'm focusing on the lower time frames, but it's the same concept. So when you're going through the strategy lessons, the same patterns will be playing out on the higher time frames. That is also called the Holy Grail. Once we go through the finish the strategies and finish the management, we're going to focus on Holy Grail, which is combining the higher time frame analysis with the lower time frame analysis, right? Which is the hybrid approach, right? And the hybrid approach is what I prefer, right? It's what I really like and it really fits my personality. So in the next lesson, we're going to be talking about the hybrid approach. It's how to combine swing trading and day trading together. And again, you're going to see many examples of the hybrid approach when we get through the Holy Grail lessons, where I actually look at the charts and break it all down. So just know that when we go through the strategies, they are focused on day trading because it's much more refined. It takes more skill, right? So that's what I decided to actually film this course on, is focusing on day trading, just because it does take more skill. Swing trading, you don't have to go all the way from the higher time frames to the lower time frames. You just focus on the higher time frames. So it still takes skill, obviously, right? But it's not full dedication. So that is it for now when talking about day trading. In the next lesson, let's talk about the hybrid approach.